Hi, and welcome to Chapter 6, Banking Procedures and Control of Cash. So cash is most easily stolen, lost, and mishandled. Need to protect all cash receipts and to control cash payments. Establish good internal control, a system of procedures and methods to safeguard cash and monitor operations. So internal control examples. Responsibilities and duties of employees are divided. So the person getting cash in, maybe in a mail room or getting checks in, would not be the same person depositing the cash. Just so that there's some accountability, so the same person can't put stuff in their purse and walk out on you. So you got to have internal controls and split responsibilities and duties. All cash receipts are deposited into the bank on a daily basis. You want to get that cash in the bank as soon as possible. Nowadays we don't use cash so much unless it's like a cash intensive business like, even like McDonald's isn't that cash intensive anymore, but maybe like a concession stand at a baseball game or something like that is more cash. But nowadays everything's done more electronically, so this is not a big thing, but internal controls over cash, even checks, need to have controls. So all cash payments are made by check. Employees are rotated. Another thing about employees are rotated, usually if you're an accountant, they usually make you take at least a week off work so that they can check if anything's bad, usually in a week. It's kind of suspicious if they don't take a week off. All checks are authorized for payment. Bank accounts are reconciled monthly. Okay, so explain banking procedures and checking accounts. Signature card verifies the authenticity of the signature on all checks. Deposit slip is a form used when making deposits. Lists each check individually. Lists total amounts of currency, coins, and checks being deposited. A debit card may carry a MasterCard Visa logo. An amount of purchase is deducted directly from the checking account. Okay, so this chapter usually, you think, okay, this is pretty easy. It's a lot about banking. Everybody should have a bank account, a checking account, reconcile their personal bank statement. But I think more days, I don't think people do reconcile their bank statements. So some of this may be new to you and you're so used to doing electronic banking. But, this is just how the banking system works, okay? And especially in a company, you have to make deposits. So you fill out the deposit slip. The address is pre-printed, possibly. You have a date. Down here you have a routing number that identifies the bank, and then the account number is usually pre-printed on a deposit slip as well. You usually list your check numbers and the amounts you're depositing and the cash. Checking account endorsements. Now this is an area where most people are like, oh, I've never heard that before. But endorsements, signing or stamping of one's name on the back of the check. So payee has transferred the right to deposit or cash the check to someone else. So a blank endorsement does not specify that a particular entity must endorse it. So a full endorsement, an entity signing the back of the check, indicates the name of the entity to whom the check is to be paid, and a restrictive endorsement is stamped for deposit only. Okay, I think there's examples here. Yeah, so a blank endorsement, if you just sign the check, this can be further endorsed by someone else. And actually, anybody can pick it up and deposit it. So this is kind of the worst type of endorsement you can do. You want to say, pay to the order of, and your bank account that you want to deposit it in. So this is a full endorsement and much better. The restricted endorsement is the best, but it limits further action. It's for deposit only. Okay, so journal entries to record deposits. You're going to be increasing cash, right? So like proceeds of cash sales. So you have a sale that results in getting cash. So you debit cash, credit sales. Proceeds of collection of company's accounts receivable. You debit cash, reduce accounts receivable. Other sources of revenue. Credit cards, which are issued by financial institutions and by credit card companies. MasterCard, Visa, and Discover. American Express. A drawback is that merchants typically must pay a service fee. Debit cards are issued by the banks, savings and loans institutions, and credit unions on behalf of depositors. Card is not an extension of credit. Holder cannot spend more than the balance currently in his or her account. With minor exception, it is the same as a credit card. So here is deposits of the proceeds of credit card sales. You're increasing cash, increasing service charge expense, and crediting sales. The checkbook. When checking account is first opened, checks are issued. Check, written order signed by drawer instructing a drawee to pay specific sum of money to payee. Canceled checks have been processed by the bank and are no longer negotiable. Okay, and it's important to know the difference between the drawer, drawee, and the payee. Make sure you know the difference between those, that terminology. So on here, you'll see the drawee is the bank in which the drawer has an account. Okay, to whom the check is made payable is the payee. The word and should be used only to signify decimal positions. So it's important here where it has $580 and. And another important thing that I've always learned about checks is this written out on your check, $580.00 would overrule if they can't make out what this number is, or there's a discrepancy. I always was taught that the words overrule the numbers. I don't know if banks still do that today. This is the code to identify the bank, the check number, the date of the check, the account number. This is the routing number here. And a line here is important so they can't add anything additional. And when it processes the check, the bank imprints the amount paid here. Okay, so just some notes about a check. Okay, an amount mismatch. This kind of more explains what I was talking about. If the written amount on the check does not match the expressed in figures, the bank may pay the amount in the written words, return the check, or contact the drawer to see what was intended. Company records. Okay, here is the deposits made, the checks written. So you got to have accountability in your checkbook and have a listing of those. A bank statement reflects all activity in the account during that period. Starts off with the beginning balance. The checks the bank has paid are subtracted. Any deposits received are added to the account. Other charges or additions are indicated by special codes. Okay, so here's an example of a bank statement. I'm sure, hopefully all of you have seen one of this before where you have your running balance and you have your ending balance of your account. Okay, we'll learn how to do a bank reconciliation in the next learning objective.